Hey everyone, Rob West here. You've heard me talk about faith and finances for years, and a common question I get is, how can I align my faith values with my banking decisions? Well, we recommend our friends at Christian Community Credit Union who've been serving Christians for over 67 years. Visit joinchristiancommunity.com to learn more. That's joinchristiancommunity.com.
Membership eligibility required. Accounts are privately insured up to $250,000 by American Share Insurance. This institution is not federally insured.
What's the difference between a bank and a credit union? More than you might think. Hi, I'm Rob West. At first glance, banks and credit unions can seem pretty similar as they both offer valuable financial services. But dig a little deeper and you'll find that credit unions can be a powerful partner for managing money. Caid joins us to explain why. Then we'll take your calls at 800-525-7000. That's 800-525-7000. This is Faith and Finance, biblical wisdom for your financial decisions. Well, it's always educational when Caid joins us. He's the Chief Marketing Officer at Christian Community Credit Union, a faith-based financial institution and a not-for-profit underwriter of this program. Great to have you back.
Thank you, Rob. It's great to be back with you.
Banks play a key role in our economy, no doubt, but what sets credit unions like CCCU apart and gives them a unique place in the financial world?
Well, first and foremost, credit unions are not-for-profit cooperatives owned by their members. So the focus is on long-term member relationships and service is preeminent. At CCCU, our mission is rooted in striving to serve and love others like Christ.
Yeah, and that really is a differentiator, no doubt. We, of course, get a lot of questions from listeners who want to do their banking with a financial institution that aligns with their Christian values. Talk about why that's so important.
Well, I think Jesus said it best in Matthew 6:21, "For where your treasure is, there your heart will be also." So how you use your money reflects your values and shapes your heart. Where you choose to bank should as well. At CCCU, we try to help you align your finances with your biblical worldview. For example, we provide affordable financing to build new churches and to help Christ-centered ministries grow. Thus, we aim to ensure that your money doesn't just earn you a great rate, it also helps expand God's kingdom.
Yeah, and I love that about your work at CCCU. You know that you're working with an institution aligned with your values, but you also know a portion of every dollar is going to some incredible kingdom-building work. Now, many people assume credit unions can't match banks when it comes to rates. Is that actually true?
No, not really. In fact, the opposite is often true. We don't exist to make profits for shareholders. The profits we earn are returned to members in the form of better rates and lower fees. And at CCCU, we donate a portion of earnings to Christian ministries. So we take biblical stewardship seriously. Thus, our products are designed to help members honor God with their finances.
Yeah, and in practical terms, what are some of the products then that CCCU offers to individuals? And perhaps you can even give us some of the rates that you offer as well.
Sure. Rates can change with market conditions, but I'll speak to today's rates. Our Harvest checking account offers a high yield of 4% APY on deposits up to $5,000, and there are no maintenance fees. The Harvest High Yield Savings Account pays 5% APY on deposits up to $5,000. And the Welcome CD, which is a great introductory vehicle for new members, offers 5 and 10-month terms that pay between 4.5% and 4.75% APY. And we offer the only credit card I'm aware of that not only earns you 1.5% cash back on every purchase, but also gives to Christian causes with every swipe. In addition, we offer vehicle loans, mortgages, and HELOCs at competitive rates. And all of this comes with full-service digital banking and 24/7 member support. And importantly, we also offer resources from trusted partners, including FaithFi and Compass Financial Ministry, that help members grow in their financial discipleship.
Yeah, I love that. And a lot of our listeners right now may be surprised to hear how competitive those rates are alongside the great support and the alignment with a Christian ministry. Now, let's talk about that support of ministries for a moment. How does that actually work at CCCU?
Well, we specialize in ministry lending and banking. We offer property loans, equipment loans, operating accounts, and even high-yield savings for reserve funds. With 68 years of experience and over $1 billion in ministry loans funded, we understand the financial needs of ministry. So we're not just funding projects, we're partnering in gospel advancement. Our giving supports ministries that spread the gospel, combat human trafficking, protect vulnerable children, and provide disaster relief. In fact, we've given over $6.5 million to date back to Christian causes.
Incredible. Just a few seconds left, Aaron. How does somebody become a member of CCCU?
Well, membership is open to Christians and Christian ministries nationwide. You can join through your affiliation with your church, ministry, or school, or you can join via our partner charity, Christian Alliance for Orphans, or even via a family member. With our new streamlined application process, it's never been easier to become a member of the Christian Community Credit Union family. All you have to do is visit joinchristiancommunity.com to get started.
Awesome. That's Aaron Caid. Aaron, we appreciate your time today. Thanks for stopping by.
Thank you so much, Rob.
The website, folks, joinchristiancommunity.com.
Financial fear is real, but so is God's promise to provide. At FaithFi, we know the daily stress of money can overwhelm your heart, but Jesus reminds us to look at the birds of the air. They don't worry, and yet our Heavenly Father feeds them. In Look at the Sparrows, a 21-day devotional, you'll find peace by focusing on God's faithfulness as you discover how to overcome financial anxiety with faith. Visit faithfi.com/sparrows and begin your journey with Look at the Sparrows today.
Have you ever wondered where your money goes when you deposit it in a bank? Christian Community Credit Union believes in helping advance God's kingdom through everyday financial transactions. For over 67 years, they have provided values-aligned banking solutions to thousands of Christians and ministries. Consider Christian Community Credit Union as your banking institution by visiting joinchristiancommunity.com. Membership eligibility required. Each account is insured up to $250,000. This institution is not federally insured.
Thanks for joining us today on Faith and Finance. Hey, let me take a moment just to mention our FaithFi Partner Program. So many of you are so encouraging as you send notes and emails about the program, how it's been a blessing to you. You've been encouraged by hearing some of the stories of life change as we share what God is doing as He's working in the lives of so many of our listeners as we encourage them to be faithful stewards. And you're wondering how you can be a bigger part of the ministry here at FaithFi. Well, one of those ways is by becoming a FaithFi partner. Those are men and women all over the country and even beyond that support this ministry every month with your financial support. FaithFi is a listener-supported ministry. FaithFi partners give $35 a month or more to support our work so we can reach more people with this message that we want to help them see God as their ultimate treasure. And as part of our way of saying thanks for being a FaithFi partner, we send you some things that allow you to grow in your walk as a steward. One of those is our quarterly magazine. Every quarter, you'll get a copy of Faithful Steward delivered to your inbox. It's beautiful, a 48-page magazine full of articles that are practical and theologically sound that take you deep into God's Word to encourage you in all aspects of your stewardship. You'll also receive our studies and devotionals pre-release every time they come out, typically 2 per year. And our newest study, Wisdom Over Wealth, 12 Lessons on Money from Ecclesiastes, is due out in May. You'll receive that as a FaithFi partner. So if you've been blessed by the ministry, we'd invite you to become a partner today. Just head to faithfi.com and click Give at the top of the page. That's faithfi.com and click Give. And if you become a partner now, you'll be ready to receive the next edition of Faithful Steward and our new study, Wisdom Over Wealth, as soon as they release in early May. First up is Jaquina in Chicago. Go right ahead.
Hi, thank you for taking my call.
You're welcome. Thank you for calling.
I was calling because I have a 401k that I have at somewhere I used to work about 15 years ago, actually, at the University of Illinois, Chicago. It's about, I want to say, the last time I checked, about $15,000 in there, but I have not been at that job for over 15 years, and I just left it there to grow. And I want to know, is it a good idea just to move it? I should move it to, like, currently I'm working and I have a 401k. Should I combine them or should I just leave it there? It was actually kind of different because it's a SERS system. I think that stands for State and University Retirement System. I think it's the same thing as a 401k. So I just left it there. Should I move it to what I have or just let it grow there?
Yeah. So your new job, you have a 401k there, correct?
Yes.
Okay. Yeah, I generally recommend that, especially with the kind of balance we're talking about. Not that that is insignificant, $15,000. It's a lot of money, but it's not, $150,000 where you might get an advisor to manage that separately. So I think rolling that into your new 401k creates just a little bit more simplicity. It's not another account to keep up with. You can unify the investments. So whatever investments you've selected in your 401k, this new money would automatically go into that. And then when you get, closer to retirement, you separate from your employer to whatever God has for you in that season of life, then you could consider rolling it to an IRA and having someone manage it for you, which is what I would recommend. Now, what you may find, though, Jacquiana, is that depending on exactly what type of account it is, it's probably a pre-tax retirement account, but it may or may not be a 401k, and therefore it may or may not be able to be rolled in to your existing 401k. So your first question would be to your plan administrator with your current 401k, providing them the details on exactly what you have with your previous employer and asking that question. They will be able to quickly tell you yes or no. If the answer is yes, that's the direction I would go.
Okay.
All right.
Okay. Thank you very much.
You are so welcome. Thank you for calling. Call anytime. Let's see. We're going to go to Illinois. Kathleen, you're next up on the program. Go ahead.
Thanks for your program. I have a stock in my portfolio that is I have a between 40 and 47% loss, and it's got an F rating, and it's a large part of my portfolio. So it's like holding it is not a good idea. I want to sell it, but I want to know what to do with it after I do that. I have it in Schwab, so I don't know if there's a fund that I could put it in that is better. I don't know because I've got a lot sitting in there.
Yeah. Well, first of all, Kathleen, let me just affirm what you're saying. And that is, regardless of how that stock is done, and I understand it's done very poorly, you have what's called a highly concentrated position. And that's not advisable because we're taking an inordinate amount of risk where you have too much riding on one company. And so I like the fact that you're thinking about repositioning your portfolio, but in doing so, you really need some wise counsel in that. Because first of all, you want to make sure you take full tax advantage of the loss. And then secondly, you want to think about where is the best place for you to be invested moving forward based on your goals and objectives and risk tolerance and age and income needs. And I think that's really where an advisor will shine. Unfortunately, I can't give you those specific recommendations over the radio. We don't do that, but I wouldn't want to even if I could because I don't know all the other pieces of your financial life, and that's where an advisor will come in. So I'm going to encourage you to check with a certified Kingdom advisor there in Illinois who can look at your overall situation and then perhaps actually help you manage that money. You could find a CK on our website at faithfi.com. Thanks for your call today, Kathleen. Johnny is in Miami. Johnny, go ahead.
Yes, I appreciate you taking my call. I'm contributing to a employer 457B plan. I have those funds going into a Roth plan, and I'm contributing the maximum amount. I'm married, over 50. I'd like to know, on top of that, can I also open up a personal Roth IRA and a traditional Roth IRA?
You can, yes. So alongside a company-sponsored plan like a 457, 401k, or 403b, you can also have an IRA, and you can have both a Roth and a traditional. The key would be you cannot contribute more than the contribution limit for the year among all of the IRAs that you have. So for 2025, what is your age?
63.
Okay, so you would be able to use the catch-up provision over the age of 50, which would allow you to put in a total of $8,000. So in addition to whatever you're putting in the 457, you'd be able to put in up to $8,000 across any number of IRAs. So if you wanted to put $4,000 in a traditional and $4,000 in a Roth, you could do that. You want to put $8,000 in one and nothing in the other. The key is across all the IRAs that you have, Roth or traditional, you can't put more than $8,000 as somebody who's 50 or older in the year 2025.
Okay, so this 8,000, that's not including my 457 Roth.
Right. The 457 Roth is completely different. That's a company-sponsored retirement plan or a government-sponsored plan, but it's different. It's just the Roth variety, but it's different from an individual retirement account Roth, and so you can have both. Yes.
Okay. Right. So the personal Roth IRA and the traditional combined can only be up to $8,000.
Yes.
Personal.
It's for the IRA,
okay.
which I stands for individual. Yes. So that's not the company's plan. The IRA, individual retirement account, the total for the year this year happens to be $8,000 if you're 50 or older. And the key there would be you've got to have a modified adjusted gross income under $150,000 in order to be eligible to put it into the Roth IRA.
Okay. Okay. Thank you very much. Appreciate
All right.
it.
Absolutely, sir. Thanks for your call today. Back with your questions on any financial topic after this. Stay with us.
If you enjoy this radio program, you're going to love all of the many different resources waiting for you at faithfi.com and the FaithFi app. You'll find powerful wisdom, free podcasts, articles, videos, and more from leading voices such as Randy Alcorn, Howard Dayton, Ron Blue, and our own Rob West. Grow in wisdom and knowledge by connecting with a community of thousands of Christians striving to be good and faithful stewards at faithfi.com or by downloading the FaithFi app.
We are grateful for support from Praxis Investment Management. Since 1994, Praxis has offered investment products designed to meet practical needs for everyday investors seeking to steward their assets consistent with their desire to promote positive social and environmental impact. Praxis aims to bring a faith-based approach to ETFs, mutual funds, multi-fund portfolio solutions, and money market accounts reflecting their 500-year-old Anabaptist Christian faith tradition. More information is available at praxisinvest.com.
Great to have you with us today on Faith and Finance. We're taking your calls and questions. The number, 800-525-7000. I've got room for maybe one or two more questions here in the final segment. 800-525-7000. Let's go to Fort Lauderdale, my hometown. Mary, how can I help?
Hi, Rob. This is Mary. Just like you said, you have such a pleasant voice. My question is, I have a piece of land that I would like to sell, but I would like to sell it to more of a developer, maybe put like someone that would be developing a spa, a hotel, or something along those lines. So I wanted to find out or know, where can I go to access that or look for developers that would be interested in, purchasing some land to do some kind of development?
Sure. Yeah, it's a great question. And, this is not obviously your typical real estate transaction. And so I think obviously this is something that's going to take a little bit of legwork. I think the first issue is just, what is your land's potential? Developers are going to, of course, look for land with certain attributes, location, but also the zoning and the size, their development potential. And so I think understanding, what makes your land appealing will help you target the right developers. I think you could certainly start researching potential developers. They're not all the same. Some focus on residential, others commercial, and so forth. I would work with a professional. And, I think that can really help you streamline the process, connect you with buyers, and maximize the sale price. So I would be looking to hire a realtor who specializes in raw land or development sales. They'll have a network of developer clients. And so that really, I think, would be a key next step for you as you make, the next steps here. You could also connect with an attorney, a real estate attorney, who could help you review offers and contracts. But your real estate agent should help with that. If you have a larger or a trickier parcel, a consultant could advise you on boosting the value. But I think, again, that agent could be the starting point, the realtor, as long as that's somebody who specializes in these types of sales, I think would be really important. So that would be where I would go next. And, it may take a bit to call around and find out who are those realtors that specialize in this area. Obviously, Fort Lauderdale is a hot real estate market, and there's some incredible developers down there doing a lot of great work, and they're not making any more Fort Lauderdale real estate right there near the ocean. So if you have a unique parcel that's suited for a developer, I suspect you'll have a lot of interest. But given that this is something that you're not accustomed to, you've not done it before, I think that's where having some wise counsel walking alongside you could be key.
Okay, and then do you think I would need to make a company, set up a company?
Yeah, you certainly may. It's going to come down to how you actually structure the deal. There's a number of ways that you can go about that in terms of, ultimately how that is sold. In some cases, you'd make just an unconditional sale where it's a quick cash sale at the current value, no strings attached. In other cases, it would be a conditional sale. There may be an option agreement. It could even be a joint venture, where you're sharing in the profits once the project's built. Higher risk there, but you get a higher reward. So ultimately, that's going to come down to, what you ultimately do. If it's just a straight sale, you may not need to worry about that. One thing to consider would be if you want to do any charitable giving as a result of the proceeds, you might want to give a portion of the property equal to the giving you're planning to do to a donor advised fund at the National Christian Foundation prior to the sale, and then that portion wouldn't have any capital gains tax. But apart from that, once you have you're going to proceed in this direction, you could check with a CPA, who could advise you on the best tax structure and legal structure.
Okay, thank you so very much for that. It has been very helpful.
Good. I'm so glad. Thanks for your call today, and all the best to you, Mary. Let's go to Lake Bluff, Illinois. Hi, Maureen. How can I help?
Hi. My husband died in excruciating death 2 years ago, and he was ill probably from 2016 on until he died. So his 401k I converted to with Inspira into a IRA, and I don't know what. The first question is I don't know what a cash sweep option is. The second is they only had 3 beneficiaries. I have 4 kids, so I crossed out the line. I made the fourth one an equal distribution in the event of my death, which would be 25% each. And the last question, probably the most important, is unfortunately my husband didn't file taxes from 2016 to 2022. And so the last question says, is there an IRS withholding? And technically there is, because of having to try to get everything done with his, with the business. But notices have come to both me and my deceased husband. Obviously, with increased penalties and interest and everything else, it's really a mess. And we've lost 3 accountants, 2 that couldn't handle it and 1 through death. So we still haven't secured an accountant. Do I have to list the fact that there is a withholding because I was on the IRS notices myself? Somebody told me I didn't have to do that because I didn't have any income. It was all his income.
Yeah. Boy, a lot of questions there. And I think, and I'm so sorry to hear about your husband's death. There's just a lot of pieces here, far more than I'd want to try to advise you on with our short time here together on the radio, just given the complexity. It's not that I don't want to help you. I just want you to have somebody who can look at this. And I know you've tried and others have passed, and I can understand just due to the complexity of this. But I think you need to find that trusted advisor who can, walk through this with you on everything from the withholding to making sure that the, final tax return is filed and how you need to handle that as you're now going to be filing single. And, we've got the non-filing. Did you all file separately? So you did file, but he did not? Is that the way that it worked?
No, we filed jointly always.
Okay. So the 2 of you didn't file returns from 2016 to 2022?
Correct, yeah.
Yeah.
And then the person that did my thing last year, basically, was what we tried to secure what his income was and everything else. That basically I asked her if there's a deadline, and she said, because all I get is Social Security now, she said I didn't have to file.
Okay. Yeah, so let's do this. I'm going to have you hold the line, and I'm going to personally get you connected with a CPA that could walk alongside you, who's a Christ follower, who could potentially help you just kind of navigate all of this, especially given the significant number of years there where you were not filing, perhaps to get all this, corrected and on track, and could advise you on these issues that you're asking about. So let's do this. If you'll hold the line, Maureen, I'll have my team get your information and we'll get you in touch with the CPA, okay?
Thank you so much. I really appreciate it.
Yes, ma'am. Lord bless you. We appreciate your call today. Well, if you want to support our work here at Faith and Finance, becoming a Faith Fi partner would be the way to do that. There's already 8 that have become partners just today. And as a thank you, we send you 4 copies of our magazine, Faithful Steward, all of our studies and devotionals. You can check it out, faithfi.com/give. Big thanks to my team today, Devin Patrick, Jim Henry, Taylor Stanrich, and Sandy Dickinson handling our phones today. Go out and live for Jesus today. Make God your ultimate treasure. Come back and join us tomorrow. We'll see you then. Bye-bye.
Faith and Finance is provided by Faith Fi and listeners like you.